Tell me, how does that work? So let's assume I own Bitcoin today. Bitcoin's priced at X. So I'm on your platform.
Mm-hmm.
Just walk me through. I mean, let's say the price today is, for the sake of argument, 65,000.
You put $1,000 worth of Bitcoin on the platform.
In today's value?
In today's value.
Okay.
That's your collateral.
Right.
So you take out a loan with an LTV of 50%. So you take out $500 worth of, let's say, stablecoin, USDT, USDC.
Mm-hmm. Joining me on the couch today is Stefan Kimmel. Stefan is the CEO of M2. I find it quite amusing when people say, I just bought my coffee using Bitcoin, and I'm like, why would you do that?
Banks are all about managing risk. So they would not take on a risk that they think is not acceptable. Right. So if a bank already accepts a crypto exchange, they will have done very, very lengthy and thorough homework before they take on that exchange.
Welcome to today's episode of Couchonomics with Arjun. I guess it goes without saying I'm Arjun. Joining me on the couch today is Stefan Kimmel. Stefan is the CEO of M2. And as he corrected me before we started this show, M2 is a crypto exchange and an investment platform, which is headquartered out of the Abu Dhabi, which is just down the road from where the studio is. So with that, Stefan, welcome to the couch.
Arjun, thanks a lot for having me on your couch. Glad to be here.
No, welcome. And I actually got to meet Stefan, I think about 3 years ago when we were talking. At that time, you were living a different avatar, right? You were more in a suit and a shirt and a tie rather than a T-shirt. But, good to have you here. And I heard about M2, I guess about 6 to 8 months ago. I don't know the exact time. And some friends at ADGM sort of pointed me in the direction of, that there's an exchange which is coming out of ADGM, or you're regulated out of ADGM, and we'll talk about it. So I got onto my email and I said, let me drop you an email and see if you still remember me. But you did. Thank you for that. And I'm happy to be here. So, Stefan, let me start with something. So we have a wide audience, right? And not everybody really understands digital assets, crypto, DeFi. So, and I think a lot of people, a lot of commentators, including me, not in this case though, use these words interchangeably, right? So in your words, could you just demystify these three terms to us? And, maybe there's a cute little Venn diagram somewhere, which is DeFi, digital assets, and crypto, and maybe not in that order. I'll leave the order to you.
Yeah, perhaps let's start with digital assets. And again, that probably means different things to different people. I think in the widest sense of the definition or understanding, it's any asset that's created and maintained in the digital space, so digitally. And that can be anything from photos, videos, texts, music, anything you have. I think a bit of a narrower definition of that would be things that actually have a value and that also come in line with an ownership of that asset. So but it's still a very wide range of things that live in the internet or in the digital space. And
it doesn't necessarily have to sit on a blockchain either.
No, in anything on computers, in the internet, in AWS, anywhere, not physical.
Perfect.
So the main differentiation for me is physical assets versus that live in the brick and mortar real world versus the digital that live in computers, in data. Can be binary. Second term was DeFi. Yeah, DeFi is coined as a differentiation from the traditional finance, which is usually operated under the supervision of government and regulators and operated by banks or fintechs and intermediaries. So there's one central or several centralized organizations that are required in order to run that financial system. So as an end customer, I have a certain dependency on that organization, on that intermediary, and I'm under the supervision of a government when I interact with financial services. DeFi, the attempt of DeFi or the intention behind DeFi is to do the opposite, to disintermediate the space and get rid of intermediaries and try to put the power and control and ownership fully into the hands of the individuals. So it's creating services, usually code-based software services, that live in the internet again and try to offer financial services without the need for intermediaries for banks. The origin of that, of course, is Bitcoin, which was launched just after the global financial crisis. Everybody was upset with how banks and governments handled the situation. So the intention was to have an asset that can be transferred from one individual to another without the need of a bank, without the control of a government when it comes to controlling inflation, interest rates, etc. So that's DeFi as opposed to traditional finance. Getting rid of governments and banks is the simplest answer, and putting it in the control of the individual.
And then the most emotive word in financial services, crypto.
Well, crypto is a very, very wide term. I mean, in the end, the narrowest definition is actually a digital currency. So currency or means of payment, or value store and value transfer. That only lives in the digital world. That is again not controlled by a government, by sovereign, but by individual organizations. Decentralized organizations can be private organizations as well. But it's a range of currencies for transfer of digital value, or transfer of value in a digital space.
So my one question, and again, this debate, we can go on, and actually I was very fortunate at the end of last season, I had David Schoen, right, on the show. And, it was a coup as far as the show is concerned, because, he's the godfather of most things, digital assets, crypto, and so on and so forth. My question is, as greater regulation walks into this space, right, whether it's digital assets, crypto, DeFi, right, this whole concept of decentralization, does that just become, I guess, a direction of travel rather than a destination, or does it ever really materialize?
Depends on who you ask. So that's actually a very controversial point, even for me to say, because there's now almost a battle or a difference in philosophies between traditional DeFi. Because when crypto and the whole space was generated, it was all about DeFi, and the whole point was to get rid of financial institutions and intermediaries. Centralized exchanges like M2 are almost the opposite. They are regulated entities, they are intermediaries to offer those services in different forms, on different technology, with a lot of innovation in it. But at the end of the day, it's going back to intermediaries. And you're spot on when you mention regulation. When DeFi was started, it was trying to operate in a completely deregulated space. That had certain consequences. I'm sure we'll talk about those later on. That has advantages, but also some significant disadvantages when it comes to protecting the individual, transparency, etc., etc. So I think probably my guess is both will coexist for a while. More innovation will be driven in a DeFi space, but less and less things will be allowed to run in a full DeFi space when it comes to people's assets. Whereas more things will move, especially when we talk about mass adoption, really bringing crypto to everybody. I think centralized exchanges, not only exchanges, but regulated players and regulated entities will be important, because at the end of the day, most individuals don't have this urge to get away from the government. They have an urge to get a convenient product, a safe product, and a good service at a good price.
And I totally agree. And I think, we'll talk about it, but my sort of throwaway comment at that is, I think, if CBDCs do become a reality to the extent that people are talking about it, then I think, you're correct that whole center of DeFi, which operates in a centralized manner, sort of will learn how to sort of coexist, because it'll be a digital currency, but highly governed by the government, the regulation. Enough of that. Let's really talk about why we're here.
Good.
Let's talk about M2. Mm-hmm. So a couple of questions. Tell us what M2 is, and tell us why Abu Dhabi.
Okay, well, M2 is a fully regulated crypto exchange and investment platform. So we have two main aspects to what we offer. One is anything around buying and selling crypto. That's the exchange. We do that in spot, futures, and as OTC desk for large institutional clients. At the same time, we offer a range of investment products, from crypto loans to crypto earn plans. So that is where you can take your crypto, you can deposit it, and you get interest on it. So for instance, our flagship product is we're paying 10% on BTC, on Bitcoin, 10% on Ethereum, and many others. That's the starting point. That's where we are today. We've been in the market for 6 months, but a big part of the attention going forward will be to offer a more and more enriched range of those investment products, structured products, some more innovative products that are a bit of a blend of the crypto space and traditional finance. But it's really a comprehensive spectrum of services based on crypto. We'll have payment cards. We've just signed a partnership, and various other products to give a full end-to-end service offering to customers who want to earn money in crypto and spend it in the real world, and invest in crypto in a reasonable long-term fashion.
I'm going to come back to you on payment cards, because I find it quite amusing when people say, I just bought my coffee using Bitcoin, and I'm like, why would you do that? But in any case, we'll come to that in a minute, right? So if I take the second part of the question, how come Abu Dhabi? So tell me about the genesis of the business in Abu Dhabi.
Well, partially because myself and more or less the founders and myself found each other here. And it's where we located, so it was a natural starting point, but it's also a very strong jurisdiction in terms of the regulation. As you mentioned, regulation plays a more and more important role, and the stronger the regulator is, the jurisdiction in which you operate, the more credible you are and the more protected you and the users are. So there's clear rules that both the service provider and the investor can comply with. They know everybody's protected, there's no questions. Versus, for instance, in the US, that's not the case, as we know.
Fair enough.
And FSRA is the oldest crypto regulation out there. It's very well established, very reputable, very recognized around the world, as we are currently rolling out into other jurisdictions. When we come and say we are regulated by the ADGM, it's not direct passporting yet, but the recognition in other jurisdictions is fantastic.
It's very strong.
It's a very good regulation.
And that beckons the question here, right? So if you read a lot of the commentary over the last sort of 12 months, maybe a bit longer, a bit shorter, there seems to be this, this rhetoric or this claim that there is a wave of digital asset propositions, digital asset companies which are forming themselves. I've got, two parts to this question, or maybe three. The first is that true? Are we seeing a wave? Secondly, is there a specific area where we are actually seeing a concentration of these so-called companies or solutions come up? And thirdly, which is for me the million, billion, $1 trillion question here, what's the need that they're solving for, right? Or are we just yet again building something which is eventually going to start looking for a problem?
It's funny. I like to compare that to the good old .com days, the .com bubble. I mean, you had companies pop up every day, and as long as they ended in .com and they had 3 PowerPoint pages, they had a $1 million or $1 billion valuation. Probably 97% of them disappeared, and they were never had any meaningful use. Yet you have an Amazon and Google and many other companies that came from that time that today are incredibly valuable, that may have been laughed at back when they started. And I think it's going to be similar. There's an insane amount of companies that are being launched. We have, 20,000 different cryptocurrencies or tokens that are out there. We have 600 exchanges out there. Most of them will probably disappear over time. The question is what stays behind. The use cases they're looking at is, again, quite a wide range of things. You have the pure investment, speculative investment, or longer-term investment. We have both of that. You have more interesting payments use cases. And to your point, Bitcoin may not, as it originally intended, to be a great means to buy a coffee or pizza. Stable coins are, for instance. They're actually very actively used and have over 100 billion market cap now. You have gaming, you have identity management, AI-based applications. So I think we're still at the very beginning of really seeing all the potential use cases of cryptocurrencies, but also of the wider blockchain technology. I think that's probably, if you look at it from a Web3 blockchain technology, it's a much, much wider set of use cases than just cryptocurrencies.
Yeah, so, and Stefan, I agree with you. So two parts to the question. The first part is, in that wave you're actually seeing in the region too, right? Yes, globally we're seeing crazy amounts of these companies, but are you seeing that in the market here in the UAE, in the wider region?
It's unbelievable. So to be perfectly honest with you, I always heard that, and I thought we're just flattering ourselves. We tell ourselves that everybody's coming here. But we recently had the Satoshi Roundtable here, which is one of the OG events, so the original gangster events where a lot of the original founders meet up, and we have the Token 2049 soon next week.
The lineup for Token 2049 is just crazy.
Yeah, and they're more and more coming to the region, but it's not just the events. On all the side discussions in these events, what we're hearing from people who used to be in Switzerland, which used to be a very progressed regulator, from the US anyway, from all over Europe, a lot of the projects and the founders find the regulatory space, the positive attitude of the government towards it, and by now the concentration of players and projects to interact with, to build an ecosystem, phenomenal here. One aspect that also plays a role, in all honesty, is just the tax situation. If you offer service that you can offer from anywhere in the world, why not do it from a place where you don't have to pay taxes? But the concentration is definitely enormously high here.
Okay, so that beckons a second question. And again, I might have got this wrong, and I think we briefly touched on before we sat down to talk, which is all these use cases, fortunately, unfortunately, exist in the incumbent world that we live in, or the traditional world we live in, right?
Yeah.
So the customers, the paying customers, are the analog world, if I may call it, rather than the digital world. Are they waking up to all of this at the speed that is, I guess, aligned to the speed at which the supply is coming? Because it would be a pity to lose out on hundreds and hundreds of great businesses. So I lived through, I'm an old guy. I lived through the dot-com bubble. I was actually in Europe and the US during that period. And there were quite a lot of very ordinary ideas and businesses, right? So some of them really deserve to actually go down, right? Yeah. As you said, they were nothing more than 3 pages or whatever, web page. I'm sure the same is the case this time around, but I'm sure there's some good ideas too. So question, is the analog world waking up to all of this and saying, we're ready to adopt blockchain, we're ready to adopt tokenization of both financial assets and real world assets, we're ready to use blockchain to register, apartments. Are you seeing that movement as a spectator, commentator, person who's part of the market?
So I think it goes in both directions. I mean, I think if the crypto world and the blockchain world wants adoption, it has to make moves towards the traditional world. So that's, for instance, why we're thinking about payment cards and other things. You need to find ways to integrate that offering and make it useful in the real world, in the traditional world, because otherwise it'll always stay just a small niche. That's one aspect to it. Do we see it from the other side? 100%. And I think the biggest examples are coming out of the US now. We've recently seen the ETFs being launched by the royalty of traditional finance, Goldman Sachs, BlackRock. They've just announced last week that they have a tokenized security now. Mm-hmm. That's, again, putting a traditional security on blockchain from a technology perspective. And I think there's a lot more of that to come. And we're seeing more and more traditional businesses experimenting, trying to figure out what they can do if it's of actual use, using stable coins, for instance, also as means of payments. Trade finance is another great example that various banks have been toying with and trying out. So I think the traditional world is making steps towards digital, or digital anyway, but also towards blockchain and crypto. It has to come from the other side as well. And I think in the long run, the more integrated the use cases are and the use of that, the more successful it will be.
So let me ask you a hard question then. So what can we do to accelerate this? What can we accelerate the marriage of the two?
Funny enough, it's regulation. To me, regulation is the key to it.
I was just thinking.
Because at the end of the day, if you want everybody to be able to adopt and accept it, you have to give assurance. You have to be sure it's convenient for the person to use, safe and trusted, and a good service. And most of those boxes can only be ticked in a regulated world, because at the end of the day, if you're dealing with other people's finances, in most countries, there's just regulation.
And are your peers, if I may say the supply side guys, up for it? Are they happy to be regulated? Because a lot of them find their DNA as, we're revolting against the man. Right? Yeah. If I may use that term.
And you definitely have different camps. I mean, the original, again, Bitcoin movement as the origin of all of it is definitely of strong libertarian views. And they would find KYC a strong infringement on privacy. And there's an angle to that. So I think there'll always be a certain group, especially on the hardcore crypto OGs, who will always prefer something that's truly DeFi, anonymous, non-regulated, and will try to build and find use cases where that is possible and allowed. And it's useful because it's usually very innovative things. I think the vast majority of people, mass adoption as we speak, don't necessarily buy as strongly into those values. They don't mind their data being stored. They much rather prefer having a hotline that they can call if something goes wrong, if something doesn't work. They prefer that over being anonymous. So that's why I think that's absolutely going to be the case.
Yeah, and I think that I think regulation will help. I do think that there's a few other things that need to be done in terms of, I guess, even getting these two camps talking more often. And I guess maybe the catalyst is to actually position the technology of blockchain up front, because I don't think as a technology blockchain has anything wrong with it. As a matter of fact, I think there's the huge benefits in terms of efficiency and effectiveness, right? And maybe that's kind of the first step, and then we can talk about all the other digital currencies. You mentioned Abu Dhabi or the UAE as a place which the regulation is fairly far progressed. Mm-hmm. It's well thought through. You mentioned certain other benefits in terms of taxes. Let me ask the flip side of the question. Setting up a company here, is the intention largely to then service the local or the regional market? Or can you actually establish something here and then truly become global?
So our intention is 100% global, to be very clear on that. That's us specifically.
Yep.
Of course, being locally owned and locally based, this the natural starting point, the credibility, the easy access to clients, both institutional as well as retail, is in the GCC region. But we've already got licenses, for instance, in the Bahamas. We're about to acquire one in Spain to serve the European region in the MiCA regulatory space. We're looking at various Asian countries on registrations. So our aspiration is global, and you can absolutely do that from here. It's actually interesting as a concept, because traditionally, often the companies that are here tend to be local subsidiaries or franchises of something that's already proven, tested, and great somewhere else in the world. But then we have the examples of the Emirates, of ADNOC and other companies that are true national champions, based here, born here, and successful around the world and recognized as great around the world. And such a national champion strategy is something we'd love to adopt and try to be the national champion for crypto out of Abu Dhabi.
And take it out. So then that beckons two questions, right? So the honest truth is, if you and me were in a crowd, anywhere in the evening in Dubai or Abu Dhabi, and you mentioned the word crypto exchange, usually get lots of wry smiles, right?
Ask my parents.
Well, there you go, right? And I think your parents are pretty bright to actually know what one is, because mine actually wouldn't, right? But so there is that overhang, right? There is that overhang in terms of security breakdowns, certain scandals, etc., etc. We don't have to get into it. Everybody knows who's hearing this show. How do you, as M2, right, manage to position yourself differently? And as you become more global, that challenge becomes more global, because these issues are more global than local, with all due respect, right? Yes. What's your thinking on it? How you guys doing it today? And because it's more than just smart marketing, right?
No, if it's just marketing, you won't get very far. Yeah. I mean, others tried that, and those are the ones that are now in the news. They were brilliant at marketing, perhaps, but they were lacking some substance underneath. No, look, we have the benefit, as opposed to some of the older players, that we're still relatively new. We started the project 2 years ago. We've gone live 6 months ago. So from inception, we already had the benefit of being fully aware of the role of regulation, problems that were arising with those who didn't follow the regulation. So we built that as part into our DNA. Everything we do, the foundation of everything we do, is to be fully regulated, to be compliant, transparent, build the right security, have a very strict regulator that looks at us, that can sometimes slow you down. It does slow you down as you try to go live. Let's be clear. Yep. But it's much more tangible and durable in the long run. And we're following the same principle wherever we go. We don't just roll out the services. We try to, wherever regulations exist, we file for regulation or registration. We make sure we're compliant with everything that is expected from us, and then we build services on top of that. That sometimes means letting go of business opportunities because they're not compliant. We can't serve big part of the world because they sanction at the moment. It's actually pretty big parts. We have a slower onboarding than a non-regulated exchange. We have to ask for more documents. We're getting a lot of heat for that at times. But at the end of the day, it's durable. It's the longevity that matters in that sense. And that's a daily bread and butter. That's what we eat and breathe as the foundation of everything.
So you're playing the endurance game,
yes,
right? It's a long-term game, right? Let me bring the second challenge on then, right? Let's assume, I'm sure you're betting on it. Not suggesting you're a betting man, but you're betting on it, that the crypto market will grow. More people will get on board, will use exchange, not just to exchange, but I think we'll talk about some of those interesting products that you're building on back of, which one can argue are solving TradFi issues using crypto and so on and so forth. Once the big boys start to take this seriously, nearly all of them offer crypto today, right? And we were having an interesting conversations in terms of, they're not as efficient as you on the pricing, therefore the customer still ends up paying more and the customer doesn't see it. But let's be honest, they have brand, they have large swathes of customers who are on their platforms. There's an element of stickiness. They have lots of data, which means that personalization, hyper-personalization can be done. It's a one-stop shop because, let's be honest, if Arjun is buying and selling Bitcoin, he's also buying and selling Apple stocks and buying a few ETFs and so on and so forth. How do you see this shakeup happening, right? And then if I may overlay just to it, as you said, there are how many exchanges already in crypto?
Around 600 as we speak.
600, okay.
Give or take.
Give or take, right? Which is a fair amount, right? For the market cap of something like what, 2 trillion? What's the crypto market exchange right now?
Two and a half trillion,
take, right? Yeah. So that's quite a lot of exchanges for just 2.5 trillion.
Yes.
How does this, play out?
So let's start with the easy part. I think purely in the crypto space, there's definitely an oversaturation. I mean, compared to the market cap, the market does not need 600 exchanges. It needs a lot less than that. Traditional markets are much, much bigger and have much, much fewer exchanges, even across futures and commodities. That's a given. And we already see that. I think what's happening already is smaller players just die out because they don't have enough liquidity going on. With the advent of more regulation, it's very, very hard for small players or subscale players to cope with all the regulation because that requires very expensive investments. So, and we already see a consolidation in the market. I get calls very, very frequently, players trying to merge or offer themselves, put them up for sale. So I think even without TradFi entering this space, you will already have a significant consolidation. That there's no doubt about that. To your key point, though, I think you're absolutely right. Right now, this is a very attractive and exciting niche. We try to offer more products and services and integrate it better to make it bigger, more attractive, and give it the extra longevity. But at the end of the day, and also to your point, yes, and we have some advantages in terms of cost base and other things.
Let's talk about that because I think that's very interesting. So explain to me how you guys different as a cohort versus some of the, if I may say, the TradFi exchanges.
Look, I mean, it's a matter of the starting point, right? I mean, the very traditional players were parts of banks who typically lived or come from a world that's just very expensive in terms of salaries, in terms of tech, in terms of everything that's being built around it. You then have a new generation, the DeFi players, that are built on lighter and leaner and digital models, already much leaner cost structures, but still using a lot of the traditional technological platforms. We're coming from a different side, even leaner with even lighter technology based on entirely new tech platforms and coming from the other angle. But I think the reality is that will eventually converge. I think in the long run, and you're absolutely right, I will probably in 10 years not want to have one app for trading crypto if it's really just trading. Let's assume it's just trading. And one app for equities and perhaps another app for currencies are usually already in the one that your broker has, so your traditional broker app. So I think they will converge in some point, some shape or form. And yes, of course, the existing brokerage apps have a wider user base, stronger brands, better recognition, etc., etc. So the challenge for crypto platforms, for crypto trading platforms is, again, can you widen the product spectrum to have greater, better other things, be more innovative, other than just buying and selling things? Because that's a low margin and very competitive business, and probably very hard to compete just amongst each other, let alone against the traditional players. And then it's a matter of what other innovation can you bring. We're seeing things like tokenized real-world assets, fractionalized securities. I was discussing with a friend yesterday who was working on, for instance, offering US stocks in a fractionalized manner. So you can buy $1 worth of Apple stock or $1 worth of Microsoft. That's a new innovative service. And I think it's driving innovation like that sets the good players apart from the not so good players. And then competition will be across traditional equities or securities with cryptocurrencies.
So a whole lot of questions gushing through my brains. First question, do you see players who are crypto exchanges then get into offering stocks, currencies?
I would think sooner or later they have to. Of course, that requires additional licenses because crypto licenses typically don't allow you to do that. Just the same the other way around. So let's see how the landscape on regulation evolves. But I think I'm convinced in the long run, you can't focus on just one because the other guys will move into that space and then they're eating your lunch.
So the second question then here is, right, so most crypto exchanges today are, providing a place where you can buy and sell fairly speculative a fairly speculative asset class, right? We were talking about just Bitcoin before we started, right? It went from X to Y, then to Z, back to Y, and it's done all of that in like 15 days, right? It's like how often, like, I find it quite hilarious. It's every time I open my app, it's like, where is it going to be? It's like I could bet on it, right? I think there's a game somewhere down the line where people can bet on what they will see next with that. I'm hoping there's going to be some evolution in terms of the products that can come out of it. And I think you mentioned some, and I'd really want to dig into that, right? Because I personally think there is an opportunity for you exchanges like you to create a marketplace for some, lending products or other forms of products. Robinhood just launched something with a credit card on the back of cashback on buying some stocks. I need to understand the product. I read about it last night. What are you guys doing in terms of building new products? You can talk about it yourself, you can talk about the industry, to move into new products which will allow more customers to come on board and make existing customers more stickier with you. So right. Where do you see that heading?
So look, it's a blend of products that are the crypto version of traditional finance products. Yep. So let's take, we are about to offer collateralized lending. So you can lend assets against your crypto. So you deposit Bitcoin and you can take a loan out against that.
Tell me, how does that work? So let's assume I own Bitcoin today. Bitcoin's priced at X. Yeah. Right. So I'm on your platform. Mm-hmm. Just walk me through. I mean, let's say the price today is, for the sake of argument, 65,000.
So right. Let's say you put $1,000 worth of Bitcoin on the platform.
In today's value.
Okay. That's your collateral.
Right.
So you take out a loan with an LTV of 50%. So you take out $500 worth of, let's say, stablecoin, USDT, USDC. So that's your starting point. That's your loan. You can do whatever you want.
So you're managing the LTV levels at a rate where you're looking at the volatility and saying, let's play careful and let's have an LTV of 50.
But obviously you have that scenario. If you have extreme sudden market movements, you can have an LTV breach. Then you get a margin call, you get a warning, please settle it, reduce your, either add new collateral. That's very dynamic. That's the beauty of doing this in crypto. You don't have to call the bank and write 15 pages of contracts and blood samples and whatever else the bank asks for. You do that in 10 seconds on the platform. So you either increase your collateral or you pay back part of the loan. If you don't do any of that, you can have an LTV breach. And ultimately, once you reach a certain level, it would lead to a partial liquidation. So we would sell some of your asset, settle, pay back some of the loan against that to go back in a safe LTV range. So that's the way they typically
And how's the traction for such products?
Fantastic. So that's one of the strongest, other than, I mean, the main use cases, I think, for crypto, other than speculation, is obviously payments. And then loans is another key thing. Because people, let's say you have Bitcoin, you expect it to go up to the end of the year. You don't want to sell it because you don't want to lose the exposure. Yet you want to buy something, be it in the real world or something else in the crypto space, a new NFT, the latest NFT that's been launched, to just mention another hype topic. And you want that.
Is that still a hype topic? I think that's done. It was 2 years ago, right?
Yeah, there's still.
Even I have a few of those digital.
Yeah, I got stuck with a few as well. Don't even get me started on that one. No, but anyway, you need money for something. You don't want to lose the exposure to your crypto. So you take out the loan against that. So that's a very big use case for us.
And so how do you see this kind of, if I was to say, look ahead for the next 2-3 years, how do you see this evolving? Like, do you see lots and lots of different credit products come up or lending products come up? Because I do want to ask about payments, but I'll ask that as a separate question.
It'll depend a little bit on the regulation, and it won't be possible in all jurisdictions. It will be possible in some, and I think wherever it is allowed and regulated, it'll be very, very popular.
People love credit.
Yeah. Well, people love credit. I mean, people need money. I think the same way why credit is very, very important in traditional finance. I mean, it's the foundation of a lot of the growth we've seen. And the reason the US is growing so much is because they're great at making debt. Partially, I'm exaggerating. Yeah. But credit is just very important in terms of funding growth, funding things you want to buy.
But we do live in a life where we want everything now, right?
Yeah, exactly.
So credit helps. Let's talk about payments a bit, right? And seriously, right? Because I tend to sort of make fun of this whole, like, why would you buy a pizza using Bitcoin? And you mentioned that there's stable coins. Let me come around to it from a different view. why is there a need? Because look at the market cap, it's small, right? And invariably people who hold stable coins are people who are at a certain sort of income level. And maybe I'm overgeneralizing, I got it wrong. They have access to debit cards, credit cards, prepaid cards. What's this sort of need to be able to use your stable coins to go and buy? Like, why are we so chuffed about doing it?
Well, look, I mean, the use case here is mainly around, there's a couple of use cases. One is especially in countries or cross-country where the traditional finance system is less mature, has certain restrictions.
Agreed.
That's a prime use case. So if I sit in Germany and want to transfer something to my neighbor or to even somebody in Spain in the euro space, $50, €50 of course, I can do that instantly. I don't need stable coins. Yep. There's no need for that. That's also why stable coins in Europe are much less popular than they're somewhere else. Whereas across African countries, Asian countries, where they're most popular, it can take 2 weeks and cost you a fortune.
So cross-border, I get it.
That's the easiest one.
Yeah.
Same would apply if I want to do something over the weekend on a Saturday night. I don't need to wait for the bank to open on a Monday morning. I can do it instantly at almost no cost. So cost, real-time convenience, those are the main use cases. Another aspect is in countries with high fluctuations. Let's say Turkey. We have a lot of interest in Turkey into stablecoins, simply because the Turkish lira overnight, on a daily basis, loses a lot of value. So in that case, just storing it in stablecoins as a store of value that's more reliable is another interesting use case. And so those. So
Stefan, I get that, right? But here's my view. My view is that all the crypto guys have come together, or their marketing guys have come together, and they've decided that, something, we need to legitimize the whole crypto scene. And so let's put as much content out there about, I've been able to use my crypto to buy a coffee, buy my groceries. I really don't, it doesn't matter stable coin, non-stable coin. My view here is in countries like the UAE, I can't see a need. Correct me, please, if I'm wrong.
No, I'm with you. If I really just want to buy coffee here and I have a credit card or I have cash, whatever I have, that's probably easier, more convenient. I mean, it can be charged again, if you use a payment card or credit card, you don't really care whether it's charged against your Bitcoin wallet or your crypto wallet, or it's charged against your bank account. At the end of the day, you want it to be convenient and easy. So is there a real need to buy a coffee using crypto? In most cases, probably no.
Probably not. Okay, so that brings me to the second part of this challenge, right? So we were talking about we started talking about this in terms of competition and the fact that the larger, I guess, the traditional exchange houses, exchange platforms have certain benefits, and I mean the new age types. Forget the banks, right? So you obviously talked about product diversification as being one way that you are setting yourselves apart, and I totally agree. I think that's a fairly solid idea to sort of build on. You mentioned a couple of products that you guys have launched, and I'm sure more will follow. But then on the other hand, that means you need to build all this awareness among the customers, right? So there will be a lot of people who have not yet got into the trading space of crypto for whatever reason. Either they don't like the speculation, they don't understand it, they don't see the intrinsic value. Now that drives cost to customer acquisition cost quite considerably high, right? How are you guys tackling that? Have you found some novel ways of bringing people on board, driving down your CAC, or is it, it is the price of being in the business?
It is to some extent the price. I mean, frankly speaking, what's helping us, again, going back to TradFi now jumping on board as well, the fact that Goldman and BlackRock now do Bitcoin commercials helps the credibility of the space, because that was traditionally a forum that was, let's say, publicly outspoken against crypto, raising doubts about cryptocurrencies overall as a means of payment and legitimacy of it and the longevity of it. Having them promote it now helps the industry and helps the entire space tremendously, more than any of the crypto players themselves could ever do. That's a given. Nevertheless, there's still skepticism. There's skepticism about, is it real? Is it gonna last? Is it secure? Is it legitimate, etc.? And that's again where regulation plays a big role. Being able to say we fully regulated, we are supervised, customer assets are protected. It plays a big role. But at the end of the day, customer acquisition is a costly endeavor. There's no easy magic formula. It's a lot of work. We do newsletters, we do community events, we host investor dinners. We obviously very out there on social media. We have educational pages on the website on m2.com. It's the whole package of what you would typically do to educate and to do acquisition. And education has to be a very, very important part of acquisition. It's not a hard sell.
Mm-hmm. But is it easy?
It's not easy, no.
But how do we get this ecosystem shift? So it's great if BlackRock and Goldman does something, right? Because a small percentage of the world reads that and says, this is great. So which exchange can I go to? And, front of mind is M2. And you get on and, you say, hi, M2, I'm here. I want to buy some Bitcoin because there's an ETF out there. But how do we actually domestically solve the problem? Because let's be honest, not everybody knows that BlackRock's launched an ETF, right? Yeah. Yours and my friends might, but, some of them are not. Well, there are quite a large number of people who don't care about what Goldman and BlackRock does. Yeah. So what does the ecosystem need to do differently?
It's again, it comes back to education. I mean, that aspect is, in my mind, is more education than it is hard selling. Coming to your podcast, for instance, is one.
If I can get you one customer, right, give me a call. Maybe we should put a what's it called, a code or something payment like link, that. Couchonomics 2024, and then you can tell me. Okay, let me talk about. You mentioned something very interesting about 15-20 minutes in the conversation, where you as a platform are only allowed to offer certain assets and not allowed to offer certain asset classes.
Yes.
Right? Now, correct me if again I'm wrong with this. One way that I would see people could, or the regulators could legitimize a currency like Bitcoin is allow people to use Bitcoin to invest in commodities or other equity, right? As a form of currency, in terms of saying, I'm going to use my Bitcoin and I want to buy, coffee, right? Is that possible?
El Salvador is doing it. So there's a few countries that have taken that step. Most decide not to, because most governments, excuse me, most governments like to maintain control over their currencies. So so it's possible. Most governments choose not to. I mean, most governments also still undecided whether to launch their own CBDC as another avenue. So instead of just saying we accept Bitcoin, the other way of doing this, we create our own cryptocurrency that's still state controlled. That's CBDCs, and that's also still an open question. Who's actually going to go down that path? A lot of countries are experimenting with it, but it's still very undecided.
And what's your crystal ball saying? So your crystal ball is CBDCs come, especially retail CBDCs come. What happens to all these, 20,000 coins that are there? Do they start vanishing quite rapidly, or do you think this will always remain because this is fun and speculative, and CBDCs is just a digital way of, or a digital fiat? I know it's not digital fiat, but yeah.
It's very hard to predict what's going to happen. I don't think... My crystal ball right now, if I were to take a crazy guess, is I think in most countries it won't be a huge, broad phenomenon. For instance, in the US, there's a lot of people against it. The potential old and new president has openly said he will not be in favor of CBDCs.
And I think there's a strong argument. I think retail CBDC. I think there are lots of reasons why. Yeah. You don't need them. As a matter of fact, if you want something, you could do programmable fiat. Wholesale CBDCs, I think there is an argument for it.
Well, a lot of people would say what wholesale banks already have amongst themselves. Why do they need a CBDC? It's a technological change, but they're already doing most of what that would enable. I think programmable is interesting when it comes to social welfare. There's interesting use cases if you really limit the way that currency can be used, or how long it can be used, to create certain stimuli or restrict usage of certain things. There's interesting use cases, and interesting if China's experimenting a lot with that, but very, very controversial, of course.
Fair enough. So let's talk about this, right? So you've got, there's a regulatory challenge because we do not know how, the cookie will crumble, if I can use that term. There's the whole challenge in terms of customer awareness. There is an overhang with certain reputational challenges which come out with exchange houses previously. there is this sort of global expansion plan that you have in terms of going to multi-jurisdictions, which will require you to sort of, I guess, top and tail the product, the platform, the offering by the market. What do you guys do from a technology perspective? And we haven't talked about it. So how important is the underlying technology that is allowing you not just to run the exchange, right, but to build all these products? What do you do to stay ahead of the curve? And where's that talent coming from?
Yeah, look, I mean, 2/3 of our staff is developers. So that's by far the biggest chunk, because as you rightfully said, it's not a stable and old technology that you can just trim for efficiency. There's still new evolution, new technical developments on a daily basis on the wallet system, on new protocols that are being released, new cryptocurrencies that come out, and all these need integration work. The new products that might need new, let's say, solutions to be technically viable. As the leading principle, we actually don't come from purely the technology side. That's an enabler. We try to look to innovate from a product point of view, see how we can marry those innovative crypto use cases or crypto ideas and innovations with TradFi, and see how we can come up with the best possible solutions, a really true and convincing solutions for our customers. And then we use the technology to build over that. But it's constant hiring, experimentation, and large investment in technology.
And it's not just technology. I think there's also this people aspect to it, right? Because you're sitting in this sort of, if I may say, this cross-section or intersection between, a product which is built on I guess, the crypto stack, but is starting to solve TradFi issues, right? So you've got to have the appreciation of what really happens in, if I may call, the real world. Not suggesting crypto world isn't real world. And there are not that many people around, from what I know, who can sort of straddle both ends that easily.
No, and it's hard to do that in one head, frankly speaking. So what we do is we hire a bunch of crypto native, young, innovative guys who drive that innovation, have all these fantastic ideas. We pair them with old guys, with TradFi guys who've been bleeding in the trenches, who've lived through global financial crisis, who have that experience, to make it robust and industrial grade in terms of the robustness and risk management, who also bring in the expertise. You don't have to reinvent every wheel. So bring that expertise, but at the end of the day, bring both parties together in a creative environment.
And how do you make it happen in a country which is as small as this? Right. This is, the talent base is not that big. Now, you could argue you don't need 10,000 people, right? I appreciate. But is talent available, or is your talent global?
Yeah, we source the talent globally.
Okay.
So we are very traditional in a sense. We're all in the same office against a lot of backlash, especially after COVID. I said I want everybody at the coffee machine after work. We do sports stuff together. We live and breathe together as one entity, one company. But finding that talent is a global endeavor. You can't find them all in one space.
Very interesting. So let's now talk about, the last segment of this discussion is I guess, looking forward, right? Where do you see regulation heading? Mm-hmm. Again, it's a crystal ball moment, because I want to ask you, where do you see regulation heading? Where do you see technology heading in terms of the business that you're doing?
So regulation in many parts of the world is still young for crypto itself. So many jurisdictions such as Europe have just recently, or not too long ago, released the 1.0 version of their regulations. And as companies are applying for it and rolling it out and implementing it, there'll be a lot of learning and evolution. And it's a constant discussion, of course, between the regulators and the service providers and the players to evolve that together, to find that blend of being able to offer something new and great with making it secure for investors and transparent and compliant with certain requirements. So I think the biggest aspect is certain countries will only start to have regulation and then evolve that. That's one big aspect. I think the other, and that goes back to your other point earlier, I definitely see the parallel universes of crypto regulation and traditional regulation merging in the long term to enable economies of scale and to enable the right use cases that are really required. For instance, case in point, if I want on one app to offer crypto and traditional equities or securities, I need to have two different licenses with two different regulators, potentially two compliance offices, to risk office. It's madness.
Yeah, it is.
So if there's a comprehensive regulation that allows me to do both, it's obviously superior. So I think that there's still a long way to go. That's not going to happen overnight, of course, but I think that's where it's headed.
But Stefan, how do you keep capital patient then?
What do you mean by keeping capital patient?
Typically, I think the venture capitalists have not been incredibly patient, historically, right? So in a market where yes, I appreciate that the crypto space, the Web3 space has been more buoyant than, I guess, traditional fintech. I find it bizarre using the word traditional and fintech in the same sentence, but here we go.
Yeah.
Right. But obviously, it's also a size thing, right? Traditional fintech is massive compared to the amount of money going into it. Yeah. But with regulation becoming more important in terms of making the investors feel comfortable, right, or at least the large majority, but regulation moves at a certain pace,
yes,
right, has a number of resistance. How do you keep your investors patient, that stick with us, we need the runway, this is the long haul?
Look, I mean, you have to find ways to be profitable along the way. You can't just wait to say, guys, don't worry about it, in 15 years I'm going to be super profitable. That's not going to fly. Right. But that's the same in many industries, in many situations. If I'm in pharma, right, it might take 10 years or 15 years to get FDA approval or other approvals for a new drug. And you probably have to find a way to make profit or revenues in the meantime. And unfortunately, crypto offers a lot of avenues to remain profitable, to generate profit in the meantime. Of course, and that will change. I mean, that's a constant try and error, evolve something new, find new avenues as we go along.
So you don't see that as a problem for the entire sector or players like you, that the investor pool is going to get more impatient, or you just see that there's actually going to be many more investors coming in, and so therefore it's not an
investors
issue.
Are generally impatient.
Generally, they are. That's why I said,
especially VCs. I mean, we're a bit lucky. We have more patient investors than many others, but nevertheless, usually they want to see returns on their investments sooner or later. Mm-hmm. But again, that's not specific to crypto. That's true for any industry. I mean, even you look at fintech players. Fintechs very well. There's a lot of them who do not make it because it's actually a very hard world. It's great to launch a new digital banking app. That's very easy to do.
Yep.
But how many of them actually make money?
Yep.
Most of them disappear sooner or later.
Mm-hmm.
Also has a lot to do with regulation. BNPL is another great example. There's a lot of them who launched in this country and elsewhere.
Yep.
It's a very, very hard business to be in.
Okay. So let me come to the third. So we talked about regulation. We talked about, I guess, funding. Let's talk about emerging technologies, right? So here's a hypothesis. Maybe it's foolish, but I'll say it, right? So we've got smart contracts obviously coming, courtesy blockchain. People are getting more familiar with it, and it's actually getting more universally applicable, right? At the same time, we have AI emerging, right? The question here is, what will be the role of exchanges if these things become self-sufficient for a person like me who could basically use smart contracts and AI and then trade himself? Do I really need to be on platforms? Maybe yes, maybe no. And if no, how do you see platforms evolve?
So you already have today DeFi exchanges, mm-hmm. right? They already exist. They may have, and they're based on smart contracts. They're fully transparent. That's the heart and the core of DeFi and the original use cases of cryptocurrency. So that already exists.
Mm-hmm. But the adoptions have been, it's not great, right?
The original adoption, originally everything was in there but the reality is that becomes difficult. For instance, how do you get fiat money in and out of there? How do you comply with regulation? I mean, for starters, the regulation usually requires to have certain humans that play certain roles to ensure certain things happen in a compliant manner. I think that the main reason pure DeFi platforms, with AI, without AI, whatever technology platform they're in, the biggest challenge is, can banks and traditional money flows interact with them? Can you get money in and out?
So interoperability being the challenge.
Yeah.
So are you saying regulation is the reason which legitimizes CeFi exchanges?
It's it's regulation and convenience. Again, right. A lot of people just want to have that phone number to call if something goes wrong. I get that question all the time. You can do this, you can do that, but if something goes wrong, and we don't even have to go to the extreme of sending funds to a wallet address that doesn't exist, or you losing your 12 or 24 word passphrase. Typical for those listeners that are in DeFi will know what I'm talking about. It's very easy to actually lose your assets or get hacked. There's so many hacks and other things. They're predominant in DeFi, by the way, just in terms of percentage. Fraud cases, rug pulls. I mean, those are all the terms that happen everywhere, but predominantly happen in the DeFi world because the user is less protected. You don't know who's there on the other side. It's an anonymous platform that somebody built. And that's why the role for mass adoption, something that is controlled, that is supervised, and that offers certain convenience and security, perhaps even insurance and safeguards, is the only, in my mind, is the only way for mass adoption. Certain clientele will be more than happy in pure DeFi platforms that have the skills and the abilities to use it properly. Vast majority of users will require human-run companies.
I personally think people underestimate the role of, I guess, traditional services within financial services, things like a person to call, for example, right? And I'll be honest with you, there's nothing annoys me more when I get onto some of those IVRs,
I hate that.
Right? Which banks have said they've digitized their services. All they've done is actually put you 6 steps away from a human being. You're still waiting to get to that human being.
The first sentence is the menu has changed. Please listen to the following 28 options.
Yeah, and that's a trap usually when they say the menu's changed. I start pressing 0 straight away because usually people use 9 or 0 to get to the person.
Yes.
So I've kept you here long enough, right? So going forward, right? We've obviously talked about global expansion. You've talked about building a team in Abu Dhabi. I didn't ask you. So who are the investors? Are you at liberty to sort of share that with us? So who are the primary investors in the business?
We have 2 main groups. One is Phoenix. Phoenix is a Abu Dhabi listed mining company, one of the largest miners in the world. They are a key shareholder, and the rest is Abu Dhabi family offices.
Right. Okay. So the question I was going to ask is, so beyond the expansion in terms of multiple jurisdictions, you talked about it. We talked a little bit about the products that you're building out. Obviously, you gave an example of the one that you're doing, right? You've talked about building a team in this region, which makes sense because you seem to be able to get to access and talent. What are the other sort of priorities that you're looking at, right? Are there any interactions with traditional wealth management players? Because that's a very interesting angle that I see, which is wealth management trying to be a little bit more inclusive, which is we'll give you the wealth management, we'll also give you some asset management capability, and if you just want to do simple brokerage, you can do that too. Because I think a lot of people are taking that sort of one-stop shop approach. Do you see yourself enter into a lot of B2B relationships?
100%. I mean, that's a daily conversation we're having with telcos, by the way.
Okay.
Just today we had a conversation with other banks. If traditional banks want to have the ability on their app to just buy and sell Bitcoin, for instance, a very simple offering. They may not have the appetite to get the license, the custody system, the technical platforms, the talent for that space. So we partner. And that can be a both-way partnership because we don't have all the licenses for, let's say, for handling fiat or other things. We talk to other crypto exchanges or wealth managers who want to use our own product, for instance, and offer it to their clients, so B2B2C or B2B2 whatever their clients are. So those conversations are very, very important.
Okay. And I guess you mentioned telco, there's only 2 of them, so we won't guess which one you were speaking to. But last question before we sort of end the call here. Or end the discussion here, which is around, what is the one thing that you would tell, and this is not investment advice, but just, it's a bit of sort of a shout out to customer awareness, that if there is someone, a guy like me, who wants to start trading in crypto, right? What's the sort of one advice that you give us in terms of how do we educate ourselves to get into this world?
If it's somebody who's just getting into the space,
getting into the space for the first time, and there's many more people like that, right?
Yeah. No, look, I'd probably say exactly those 2 things. Actually, it's 2 things rather than one. Is find a secure and regulated exchange. Make sure it's safe. You don't want to wake up and your assets are gone.
But how do I find that, Stefan? How do I know someone is safe? Because what's the tick in the box that I'm looking at? Which regulator is regulating them?
First of all, the fact that it is regulated.
Yeah, okay.
That's a key point, because the vast majority of the 600 exchanges out there are not.
Okay.
That potentially how long they've been around. Third one, if they have fiat rails, that's a very, very good indicator. Because if a bank is willing to take because as you know, banks are all about managing risk. So they would not take on a risk that they think is not acceptable. Right. So if a bank already accepts a crypto exchange, they will have done very, very lengthy and thorough homework before they take on that exchange. So any bank that's regulated and has banking account access, which is also convenience, because otherwise how do you get your money in and out? That's very good indications in my mind. And then in terms of how to choose, I'd say start carefully, start with the big caps, and learn as much as you can before you get any further.
And I guess that stems a question I should have asked you earlier. How important is it for you guys to have this long tail of coins on offer? Is that a differentiator?
We don't have them at the moment. It depends on what clientele you serve. So the clientele we're going after predominantly is either institutions. We work a lot with family office and institutions, but also with what we call assertive investors. So that really means people who think about money a little bit, who have a certain amount of money or wealth, who want to allocate a certain percentage of their alternative part of the portfolio into something interesting, such as crypto. They usually they're open to that. Whereas if you and they usually seek not the Pepe or dog with hat or any of those. I mean, there's a funny list of what's being pushed, or bone or bonk. Whereas and that's what we offer. We offer predominantly the larger caps that cater more for that audience. There's a long tail, and that long tail of about 20,000, there's usually less than 50 that are usually hot. What often happens, they're hot for a while, they get launched, and a lot of them are just fun token. They don't even claim to have a purpose in life. It's a bit like gaming or casino. They're not to be long-term investments or means of payment. They're there for fun. That's literally what they are. And it's usually a quick pump, and then they disappear. And we don't need to jump on that wagon for every new token that launches.
And thank you for not doing that, because I guess that is very important. I guess that's part of responsibility as you exchanges, because I think because you're going to get younger and younger population who gets enamored by all this social shenanigans which goes around, right? And you just don't want a lot of money being lost to these things, because at the end of the day, what happens is you as the exchange then take the brunt of it, because in becoming an enabler, you somehow get indicted for playing that role. Last thing, it's a comment more than anything else. For a sneakerhead like me, I've been looking at your shoes throughout. Is there a story in terms of that color? Because I can see it matches the M2 sign on your t-shirt.
It is actually the M2 shoes, the M2 sneakers, and that's the first pair we ever made of them. They were originally designed for an event we made for our launch party, actually. Right. And our marketing team did a fantastic job designing them.
Who came up with that idea?
That's a good question. I think it was Christine, our chief marketing officer.
Right.
I hope I'm not doing injustice to somebody else in her team.
But no, I think it's pretty cool. I was looking at the color and I was going, hold on, that color matches the t-shirt. Is that coincidence, or is there some intention?
We'll get you a special pair. They even have the name on it. Yeah, it's got my initials on it.
Right.
So they custom made for you. We'll get you a pair. I know you're a fan of sneakers. So
I am. That's the only thing I can be a fan of these days, because most other things I can't afford anymore. Running a family with 3 women in the house. But in any case, having said that, thank you for coming in. Right. I know it's late in the evening and you'd want to get back home. So appreciate you being on the couch.
Thank you very much for having me, Arjun. It was a pleasure.
Thank you. So, ladies and gentlemen, that was Stefan Kimmel. He is the CEO of M2, which is a crypto exchange and investment platform. We had a rolling conversation on a number of topics, not just about M2, but what's happening in the crypto exchange space, or the wider sort of Bitcoin, DeFi, digital asset space. Hopefully you found this informative. And if you are someone who has not got into crypto in terms of buying and selling, and if you're planning to, I think Stefan left some good pointers. I'll wait for you to listen into the show rather than tell you now, because you'd rather want to hear from the horse's mouth, as they say. So with that, goodbye and thank you.